What if I told you that you can make money in a recession? Today, we're going to talk about something that might scare you a little bit. A recession. Yes, you heard me right. A recession is when the economy shrinks for 2 consecutive quarters, meaning less growth, less jobs, less income, and less spending. Sounds pretty bad, right? Well, not if you know how to prepare for it and take advantage of the opportunities that arise. In fact, some of the most successful investors in history have made their fortune during recessions, and one of them is none other than Warren Buffett. You know who he is, right? He's the CEO of Berkshire Hathaway, the 4th richest person in the world, and the greatest value investor of all time. He has a net worth of over $100 billion, and he's not afraid of recession. In fact, he welcomes it. Why? Because he knows how to invest in cash flow assets that can survive and thrive in any economic situation. Cash flow assets are assets that generate regular income for you, regardless of what happens in the stock market or the economy. They can help you pay your bills, save more money, and reinvest in other opportunities. They can also protect you from inflation, volatility, and risk. In this video, I'm going to show you the 5 cash flow assets that Warren Buffett recommends you to invest in before a recession hits. These are the same assets that he has been investing in for decades, and they have made him a lot of money. If you follow his advice, you can also become a successful investor and achieve financial freedom. So stay tuned and watch this video till the end. You don't want to miss this one. Dividend stocks. How to get paid by the world's best companies. Let's start with the first cash flow asset, dividend-paying stocks. Dividend-paying stocks are stocks that pay a portion of their earnings to shareholders on a regular basis. They provide a steady income stream and tend to be more stable and less volatile than non-dividend stocks. They also offer the potential for capital appreciation and dividend growth over time. Dividend-paying stocks are ideal for investors who want to receive regular income from their investments and reinvest their dividends to compound their returns. They are also suitable for investors who want to diversify their portfolio and reduce their risk exposure. Some examples of dividend-paying stocks that Buffett owns are Apple, Coca-Cola, and Bank of America. Apple is the world's largest technology company by revenue and market capitalization. It pays a quarterly dividend of 22 cents per share, which translates to an annual yield of 0.6%. Coca-Cola is the world's largest beverage company by volume and revenue. It pays a quarterly dividend of 42 cents per share, which translates to an annual yield of 3%. Bank of America is one of the largest banking and financial services companies in the US and the world. It pays a quarterly dividend of 18 cents per share, which translates to an annual yield of 1.8%. To invest in dividend-paying stocks, you need to open a brokerage account with a reputable online broker that offers access to the stock market. You can then research and select the stocks that meet your criteria for dividend yield, payout ratio, dividend history, growth potential, financial performance, valuation, etc. You can also use online tools such as Dividend.com or Seeking Alpha to find and analyze dividend-paying stocks. Real estate investment trusts. How to own real estate without the hassles. The second cash flow asset that Buffett recommends is real estate investment trusts. REITs are companies that own and operate income-producing properties such as apartments, offices, malls, hotels, etc. They distribute at least 90% of their taxable income to shareholders as dividends. They offer high yields and diversification benefits, as they are not correlated with the stock market. They also benefit from inflation and tax advantages. REITs are ideal for investors who want to invest in real estate without having to deal with the hassles of owning and managing physical properties. They are also suitable for investors who want to generate passive income from rental income and capital gains from property appreciation. Some examples of REITs that Buffett owns are Store Capital, Seritage Growth Properties, and Realty Income. Store Capital is a REIT that specializes in single-tenant properties leased to service-oriented businesses such as restaurants, movie theaters, health clubs, etc. It pays a quarterly dividend of 36 cents per share, which translates to an annual yield of 4.4%. Seritage Growth Properties is a REIT that owns and redevelops a portfolio of retail properties, mainly leased to Sears and Kmart. It pays a quarterly dividend of 25 cents per share, which translates to an annual yield of 2.4%. Realty Income is a REIT that owns and leases over 6,500 commercial properties across the US, Canada, and the UK. It pays a monthly dividend of $0.235 per share, which translates to an annual yield of 4.3%. To invest in REITs, you need to open a brokerage account with a reputable online broker that offers access to the stock market. You can then research and select the REITs that meet your criteria for dividend yield, payout ratio, dividend history, growth potential, financial performance, valuation, etc. You can also use online tools such as REIT.com or the Motley Fool to find and analyze REITs. Bonds: how to lend money and earn interest. The third cash flow asset that Buffett recommends is bonds. Bonds are debt securities that pay a fixed amount of interest to investors until maturity, when they repay the principal amount. They provide a reliable source of income and capital preservation, as they have lower risk and volatility than stocks. They also help balance out the portfolio and reduce the overall risk. Bonds are ideal for investors who want to receive regular income from their investments and protect their principal from market fluctuations. They are also suitable for investors who want to diversify their portfolio and hedge against inflation and deflation. Some examples of bonds that Buffett owns are U.S. Treasury bonds, municipal bonds, and corporate bonds. U.S. Treasury bonds are bonds issued by the federal government of the U.S. to finance its budget deficits and debt obligations. They pay a semi-annual interest and have varying maturities ranging from 1 month to 30 years. They are considered the safest and most liquid bonds in the world, as they are backed by the full faith and credit of the U.S. government. Municipal bonds are bonds issued by state and local governments or their agencies to fund public projects such as roads, schools, hospitals, etc. They pay a semi-annual or annual interest and have varying maturities ranging from 1 year to 40 years. They are considered relatively safe and tax efficient, as they are exempt from federal income tax and sometimes from state and local taxes as well. Corporate bonds are bonds issued by corporations to raise capital for their business operations or expansion plans. They pay a semi-annual or annual interest and have varying maturities ranging from 1 year to 30 years. They are considered riskier than government bonds, as they are subject to default risk and credit risk. To invest in bonds, you need to open a brokerage account with a reputable online broker that offers access to the bond market. You can then research and select the bonds that meet your criteria for interest rate, maturity date, credit rating, coupon rate, yield to maturity, etc. You can also use online tools such as investing.com or Morningstar to find and analyze bonds. Annuities: how to secure a lifetime income. The fourth cash flow asset that Buffett recommends is annuities. Annuities are contracts that provide a guaranteed income for life or a specified period of time in exchange for a lump sum payment or a series of payments. They protect against longevity risk, which is the risk of outliving one's savings. They also offer tax deferral and customization options. Annuities are ideal for investors who want to secure a steady income stream for their retirement years and eliminate the worry of running out of money. They are also suitable for investors who want to defer taxes on their investment earnings until they withdraw them. Some examples of annuities that Buffett owns are Berkshire Hathaway Annuities, Geico Annuities, and National Indemnity Annuities. Berkshire Hathaway Annuities are annuities offered by Berkshire Hathaway Life Insurance Company of Nebraska, a subsidiary of Berkshire Hathaway. They offer various types of annuities such as fixed annuities, variable annuities, indexed annuities, immediate annuities, deferred annuities, etc., with different features and benefits. Geico Annuities are annuities offered by Geico Insurance Agency, Inc., another subsidiary of Berkshire Hathaway. They offer mainly fixed annuities with competitive rates and flexible terms. National Indemnity Annuities are annuities offered by National Indemnity Company, yet another subsidiary of Berkshire Hathaway. They offer mainly structured settlement annuities, which are annuities that pay out periodic payments as part of a legal settlement or claim. To invest in annuities, you need to contact an insurance agent or a financial advisor who can help you find the best annuity product for your needs and goals. You can also use online tools such as annuity.org or immediateannuities.com to compare and calculate annuity rates and payouts. Cash: how to keep your options open and your risk low. The fifth and final cash flow asset that Buffett recommends is cash. Cash is the most liquid and flexible asset that you can have. It allows you to take advantage of opportunities, deal with emergencies, and avoid debt. It also provides a cushion against market downturns and inflation. Cash is ideal for investors who want to have a safety net and a peace of mind. It is also suitable for investors who want to wait for the right time to invest in other assets at a bargain price. Some examples of cash that Buffett owns are US dollars, Berkshire Hathaway cash equivalents, and Berkshire Hathaway short-term investments. US dollars are the official currency of the United States and the world's reserve currency. They are widely accepted and exchanged around the world. Berkshire Hathaway cash equivalents are highly liquid investments that can be easily converted into cash, such as money market funds, commercial paper, treasury bills, etc. Berkshire Hathaway short-term investments are investments that have a maturity of less than 1 year, such as certificates of deposit, corporate notes, municipal bonds, etc. To invest in cash, you need to open a bank account with a reputable bank that offers high interest rates, low fees, and security features. You can then deposit your money into your account and withdraw it whenever you need it. You can also use online tools such as bankrate.com or nerdwallet.com to find and compare the best bank accounts for your needs. That's it for today's video. I hope you learned something new and useful about how to prepare for a recession by investing in cash flow assets. These are the 5 cash flow assets that Warren Buffett recommends and how you can invest in them. Dividend-paying stocks, REITs, bonds, annuities, and cash. By investing in these assets, you can generate passive income, preserve your capital, diversify your portfolio, hedge against inflation and deflation, and take advantage of opportunities. Thank you for watching and supporting my channel. If you enjoyed this video, please hit the like button, leave a comment below, share it with your friends, and subscribe to my channel for more videos like this. Also, don't forget to check out the links in the description box for more information and resources on this topic. Until next time, stay safe and happy investing.